Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Tuesday, and it's February 27th. Hey, we got a lot of data to go over, so we're just going to jump right into this here. We'll start off with the durable goods orders for the month of January. Back in December, we had a nice increase of 2.7%. Forecast for January is supposed to dip 1.7%, and it dipped a little bit further at 3.7%. This is a lot of, pretty heavily weighted towards orders of planes, that there were lacked orders of airplanes, which was kind of expected here. Now, when you strip out the big ticket items, you get what you call the core capital equipment orders for the month of January. So December, we had a drop of 0.6%. In January, it was a little bit more modest at 0.2%. Case-Shiller home price indexes for the month of December. So November, we had year over year of 6.1%, and December it stretched a little bit further to 6.3% year over year. So home prices still showing increases. I also saw another index by the FHFA. They show it at 6.5%. So overall, all the home price indexes still show home prices rising. Last but not least, we got the Consumer Confidence Index. So the last reporting we show here is 124.3. Forecast supposed to go up to 127.3, and it jumped all the way up to 130.8. Pretty big stretch there. This is the best number we've seen since November of 2000. So consumers haven't felt this great since November 2000, which is obviously a very good sign of where things are going. So if consumers are feeling this well, that means they're going to be out spending money on getting the economy moving and such. So obviously a very good sign. Consumer confidence is a very important level of or gauge to look at, primarily because if consumers are feeling well, then we can expect those other ones to go up, like consumer spending and such. So let's go ahead and take a look here at the headline news. Stock market is currently down. Now, the stock market was down, or it was up currently, up earlier. We had some great reports here, but as soon as Jerome Powell had his first testimony before Congress came in, basically it turned the other direction. All three indexes started going down. You'll see here coming up, bond market did the same thing. Mortgage-backed securities did the same thing. But some of the comments basically were saying that he and his colleagues were an agreement that basically further rate hikes could be, are to be expected or appropriate policy measure at this time with the heating of the economy. Basically, he also stated that PC is still his preferred preference in terms of inflation gauge. He does see it rising to 2%. Didn't say it this year, but he does see inflation rising to 2%. So those were some basis on the comments. Some stuff we've been kind of hearing along. There's really, to be honest, really no changes in there that we've seen. But again, he basically provided a reminder for the market. So the markets were up, doing pretty well, and then as soon as his testimony came out, it basically was a reminder that we're getting back into a normal market. It's still this transition phase here where the cheap money is going away. Looks like it could be 4 rate hikes versus the initially what we thought was 3, and this year, so it's possible. So here's the bond market. As we saw yesterday, we were looking pretty good. We're up here, above here. We're going further past that resistance level we had the day before, and then late in the day we just kind of dropped, testing against that level. Now we even started off a little bit lower, and now we're down about 33 basis points, which is basis putting us right back into that same level here, that same downward trend. So again, that's so lenders a lot of lenders, especially on the East Coast, had probably a little better pricing today, or about the same where we left off yesterday. And then now we're getting West Coast, we're getting pricing that's coming in worse, and East Coast is probably repricing their interest rates for worse, as well as the market started dropping. As the rates start rising this morning. On the other hand, we got the Treasury. So we were up about 2.8687. I think it was 87 this morning, and now we're pushing up against this resistance level again here on the Treasury. So we're at about 2.91 right now. Again, just kind of putting us back into that mix of the trend as we've been talking about here. So again, we had a short-lived one that started getting down here for about 2 days, and now it's kind of going back into it. Uh, again, as we mentioned yesterday, it might be temporary, but we were kind of hoping for a little longer duration than maybe 2 days. This temporary solution here. So, anyways, hope you guys. That's pretty much wraps everything that's up. I hope you guys have a great day. But if you guys want more data, just come over to Twitter. You can find me at Mike Bjork. My handle is on Twitter. I do post more data throughout the day and updates on the day on my Twitter account. So I hope you guys enjoy the rest of your day. Thanks so much for watching. I look forward to see you guys tomorrow. Bye bye.